These green candles are going through the roof. What is it? 46% in the last month. Crazy to think about how astronomical this has been with the green candles. Boom, through the roof, through the roof, through the roof. Like clockwork. Call it a bubble, but if it's a bubble happening 4 times in a row repeatedly with predictable cycles, that's Bitcoin. That's what it's doing. It is a unique asset that is not paralleled anywhere. So if you watch my previous video on January 5th, perhaps you went out and bought some Bitcoin, you would have 2.5 times that initial investment. I'm obviously not a investment professional or anything. I'm a dude on YouTube that makes mediocre videos at best, but this is how powerful Bitcoin is, and it's very predictable. It is the antithesis to the Federal Reserve and USD monetary policy. It is disinflationary in an inflationary world where everybody is going around hyperinflating their fiat currencies, fiat being the US dollar, the yen, the bolivar, etc., the pound. It is a steady rock in that sea of turbulence. So these fiat currencies historically have been a mechanism to try to stimulate the economies of their countries. So country after country repeatedly injects this either through direct injection or artificially with low interest rates into the monetary M1 and M2 supply. So this is the M1, and if we look at the difference between M1 here, currency and coins, traveler's check, compared to M2, which is the next chart with savings deposits, CDs, and other things, you can see that these are just taking it like a rocket ship. This is probably actually closely mirroring the Bitcoin chart, actually. The M1 stock here, and then the M2 stock as well. So Bretton Woods Agreement, 1944, New Jersey, the Allied powers during World War II got together and said, we're in trouble. U.S., peg your currency to the gold. We'll peg our currencies, which are in danger of hyperinflating, to the U.S. dollar. U.S. dollar becomes the global reserve currency, and it's stayed a reliably stable rock with slight inflation intentionally throughout the years, with some depressions and recessions here along the way, which are the gray areas. But previous to about 1971, middle of Vietnam, we come off the gold standard. No coincidence there. Increases pretty much from there on out, with a significant amount of increase occurring in the financial crisis, and several calling for modern monetary theory and other ridiculous policies of just inflating away our supply of currency and then not having adverse reaction from that. So the M2 actual velocity of how much that money is changing hands, if you want to think about people being proponents of trickle-down economics, I'm going to give the rich money, but it's okay because it's going to flow down. It's kind of analogous here. It doesn't prove to be the case. And when you see large shocks and people get afraid, they end up hoarding that money and it not circulating, and the velocity is decreased significantly, with it being about 60% here from the financial crisis. So the whole point is the US dollar, in this example, the fiat currency, is increasing at an exponential rate. Therefore, the value of that in your pocket and your bank account is decreasing at that exponential rate. Bitcoin fixes this, and it fixes this with its rock solid, on-chain coded monetary policy. Every 4 years, the Bitcoin supply increases. The new Bitcoin coming on to the world, to the Bitcoin network, will have. So originally it was 50 Bitcoin per block produced, 25, 12, and now we're, after May 11th, at 6.25 Bitcoin produced per block. And those blocks are what validate those Bitcoin transactions. So previously I had lost a couple of people on how the Bitcoin works technically, and I don't care to mention technically how that works, but fundamentally Bitcoin is decreasing exponentially, that is coming onto the network, whereas the fiat supply is increasing at an exponential rate. So you can see the power there where everybody knows this. That's in the Bitcoin network. So that increases the dollar value of the Bitcoin because it's disinflationary monetary policy, with these going up a little bit less each time, but like clockwork going up after those Bitcoin happenings, which has happened 3 times now. You can see the stock to flow of this decreasing by every single halving as well. Stock to flow, if you want to think about it as the relationship of the stock, meaning how much Bitcoin I have out there, to the actual inflows of Bitcoin that's happening. So if I have, let's call it about 19 million Bitcoin right now that's out there, and I'm only producing about 6.25 Bitcoin, well, exactly 6.25 Bitcoin per block. That is a stock to flow approximately of about 50, which puts it above the stock to flow of silver. So this is the stock to flow model, which stock to flow on the bottom is basically the stock of it in relation to how much is coming online again. And then on the left, the y-axis, you have a dollar value of that in market cap. The silver here being silver and the gold here being gold. These dots are basically how Bitcoin has developed over the years as its stock to flow has gone down, with it just departing from where it was in relation to silver and approaching, now has a stock to flow of about 50. So that's probably about right here, which would nominally put it, if this trend continues, at significantly more of a market value than it is. I'll just say that much. So the stock to flow is based on a very predictable release schedule of about 900 Bitcoin per day. And how that is so predictable is because it literally is the most secure network, including financial institutions and governments and international organizations in existence. It is that secure because it has so much hash power, which are those computers that are validating the transactions on that network. And you can see bottom left to upper right. You can't even see the old network back here because there is special hardware, ASICs, that are designed to secure that network and make stealing people's money almost impossible. The number of transactions also logically increasing. There's a little bit of a challenge with some of the fees associated with these transactions, but as the price increases, the amount in each one of these transactions increases significantly as well. So the amount being sent is significantly up and to the right. Number of Bitcoin addresses, up and to the right. Mean block intervals, not moving. Oh, it's not moving. That's a good thing. This 600 right here is the amount of seconds per block. So every approximately 10 minutes, that Bitcoin network places a new block of transactions on its network. So pretty much like clockwork, since about 2010, it's produced one block about every 10 minutes. That's very predictable. That's how we like our financial systems, right? Bitcoin's realized market cap, up and to the right. The difference between the price here and the market cap, obviously, is that there's more Bitcoin on the network now than previously, because every block there's new supply coming on. A lot of people compare the return on investment to previous days. So if you want to think about it like the Bitcoin price in the previous times in the past, the lowest number on here is 127%. So you would have more than doubled your money from 2017, for instance, and that was about the last high, was the end of the year 2017. So Bitcoin versus traditional assets, we have S&P and gold on here as well, and you can see the historical performance, 1 year, 5 years, etc. And then which one of these would you rather have been invested in? Pretty easy question. Correlation. One of the reasons that a lot of people are investing in speculating or storing their value in Bitcoin is because it's an asymmetric asset. It is not correlated highly to other assets such as stocks, bonds, etc. It could be, said to be a little bit higher correlated to gold or real estate than it is to stocks, and this is just showing that as well with the correlation around zero. In high stress times such as the virus that shan't be named hits, and everybody dumps out of high risk assets, Bitcoin does see a pullback commensurate to that of those other high risk assets such as stocks. This is a 1 year comparison of gold, Bitcoin, S&P, and bonds. Guess one outperforms. And then let's move a little bit into the recent past as well. And Ari Paul, I'm an Entourage fan. Ari Paul here is great at explaining this to the layman because he can see this happening in real time. So a little bit of his tweets. For most of this rally, we've seen a clear path of our algorithmic style buying. This is very recent during the US hours and not as much during the Asian hours, which hints that high net worth individuals are buying large amounts, family offices, etc., in some institutions. And this is for people that are looking to put about $5 million to $100 million of buys in there and or increase their allocation from a small 1 or 2% up to 5 to 10% because they are seeing just how powerful it is, and their narrative has changed, just like we talked about, from payment system into more of a store of value. Many factors are lined up for BTC in this past year of all these fundamentals that we've been talking about, and that was even before the virus. So a lot of those confluence of events are people seeing people like Ron Paul and Stan Druckenmiller, MicroStrategies, Saylor, other very Paul Tudor Jones come into this market and investing large amounts because they see the value in that digital gold and storing their wealth in something that's other than fiat currency, where they are guaranteed to see it dwindled away. Bitcoin has matured substantially since its last investment, and call it bubble in 2017. Showed you some of the metrics there, and then more importantly, our financial policy, the Fed's actions have done the exact opposite, which has also helped Bitcoin. So right now, about 900 Bitcoin being produced per day. Grayscale Investments is buying more than double that. So they're about 200% per day of that. And then if you want to toss the Cash App and PayPal on top of those, that's about another 900-ish, depending on the day and time of the year, etc. Bitcoin per day. So you're seeing just from those three entities alone, purchasing of more than 3 times the daily new flow of Bitcoin coming into the network. So you're seeing these things, just this confluence of events. And I don't mean to instill some speculation, but this is exactly why, in a fundamental analysis, we are seeing that skyrocketing Bitcoin right now. Anytime that masses of Bitcoin leave the exchanges, the price almost surely follows in the opposite direction because they're not trading it; they are actively holding, and other individuals are accumulating that. A lot that I get is am I too late? Have I missed the train on this one? This is a point that's difficult because of just seeing how much Bitcoin's gained, but just compare the total market cap, 300 billion right now, to some of the market cap of US dollars or derivatives and other things, gold, and it just pales in comparison. The same with arguments about it being used for laundering money. And this is just to show you how much the US dollar is laundered in comparison to that little red square there of $1 of Bitcoin. And that's just ridiculous. The Bitcoin issuance, like we've been talking about this whole time, just pales in comparison to that of the US dollar. And this is actually 6.25 now. And this 1.7 trillion is obviously more than 3 trillion now this year because of the virus. And that's not going to be decreasing anymore. So, Whitney, Joel, Sarah, John, what's up? It's not too late, bros and sisses. I hope this has helped kind of frame the discussion and your thinking around this. The the video should have at least expressed a little bit of some of the fundamentals behind it, with it getting into the actual technicals of how it works, or the technicals of the price charting on this. I've put out a couple of these videos in the past, and they've gotten decent reviews. So if you guys like this, I like to do AI content and some Bitcoin content. I see them as like very much tied into our future blockchain and AI. So hopefully you guys like that. Let me know in the comments. Definitely remember to hit the like, thumbs up, subscribe to the channel so that you can get more of this as it comes down. Let me know what you want to see. Type me some comments. Type me some things on Twitter. Let me know where you want this to head. I'm doing this for you guys to bring you into this fold. So appreciate it, guys. Thanks. See you.